It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another Real Estate Podcast on our weekend around Australia, your largest real estate podcast as we talk property from Townsville to Ballarat and every city in between, as we stream too on multiple platforms this morning, including Amazon. It is a Saturday, May the 10th, into double digits for May, and CoreLogic's monthly housing chart for May has just come out. In Sydney, all of the top 20 suburbs for annual growth were at least 20 k's from the CBD, with Fairfield, Liverpool and Blacktown LGAs dominating the city's top 20 list. And notably, 81% of the suburbs 20 k's or more from Sydney's GPO recorded annual gains, compared with only 26% of those within 5Ks. Having a look at Melbourne, pretty much followed a similar pattern, where despite broader market softness, 38% of suburbs 20Ks or more from the CBD recorded growth, with Hume, Frankston and Casey LGAs emerging as standout performers. In contrast, just 4% of suburbs within 5Ks of the city saw a rise in dwelling value. So that is the latest coming from CoreLogic's monthly housing chart for May, as we catch up on our Saturday morning with Anthony Landau. He is the Managing Director and Mortgage Broker at Equilibria Finance. Welcome back to the Real Estate Breakfast, Anthony. Any surprises there in some of those numbers for Sydney from you?
Not really any surprises. It's probably consistent with what we're seeing with our clients, where they're looking at some of those areas that are probably further away from the city, that are probably more affordable in the context of some of the challenges they're having of getting into the market. So overall, Sydney has had moderate growth, but those areas of more affordable areas where they might be opening up more projects and developments, they've had stronger growth, and that's reflected in the data that's come through.
Okay, and with some home buyers and investors feeling the pinch of the rising prices and ongoing affordability issues, the re-elected Labor government has laid out some bold promises, as we know, particularly around increasing housing supply and improving affordability. But the big question for us a week on is, can they actually deliver on these commitments, and what might that mean for Australia's property market over the next 3 years? Anthony, let's kick things off with a real estate property pulse check, and just walk us through this morning how the Australian housing market has performed over the last quarter and what key trends or shifts you've been seeing on the ground.
The last 3 months, we've had the highest rolling quarterly growth nationally since September 2024, which is quite interesting. We had an easing of growth at the end of last year. In fact, we had some negative growth. But the last 3 months, we've had consecutive rises. It's been the strongest growth since September 2024, 7 months ago now. Annual growth at the moment is sitting at 3.2% for the last 12 months. Interestingly, that's the lowest rate of annual growth since August 2023, where we had some very, very strong growth numbers. Predominantly, the growth's been driven in Perth, Adelaide, Brisbane. They're still in and around the 10% mark in growth. They've eased. Perth was up around 26%, I remember when we chatted middle of last year. But very strong growth still coming from those areas. Sydney's at about parity. And interestingly, Melbourne's growth has been negative over the 12-month rolling period. But we are starting to see a pickup in the market, and we'll talk shortly about some of the policies that have come in. The other trend we're seeing, investor credit growth is up about 18% on the last 12 months. Owner-occupier growth up about 14% over the last 12 months. So investors are back. They're back in the market, and credit growth is strong for investors. That's the other major trend we're probably seeing at the moment.
And when we look at affordability and buyer confidence, what would you say are the biggest obstacles that home buyers and investors are coming up against? Because here we are in May of 2025. We should really especially look at the interest rates and supply constraints that are in play at the moment.
Look, for someone looking to buy a home or even upgrade, but for someone trying to get in the market, the affordability, the price point they have to get in at, and that was reflected in some of your data. Most of the stronger growth areas are beyond 20-kilometre radius from the CBDs to find those more affordable areas. The other one is saving for a deposit. The median house price in Sydney, you need a deposit of $300,000 to $400,000 just to purchase a house, or $200,000 to $250,000 deposit to purchase a unit in Sydney. So just the sheer size of that deposit has made it very restrictive. Some of the policies we're going to talk about shortly look to address that. For investors, interest rates are coming down, so the cost to borrow funds, the cost to hold your properties coming down. That's been a major challenge for investors, has been cash flow, managing their cash flow. They've been getting the capital growth. There's been strong rental yields. Cash flow management's been tough. The other challenge they're getting, which has been reflected, I guess, in the negative growth we touched on in Melbourne, is legislative change that's coming in and impacting some decision making. We saw some tax changes in Victoria last year that is specifically around investors. We're seeing some changes recently in New South Wales around tenancy and land laws. Those sort of things as well do impact investor behaviour and decision making.
Yeah, the Labor government, it has announced, as I said, some significant plans to tackle both demand and supply, which, let's face it, it is so incredibly difficult to do. Some commentators say it's tokenism by political parties, but you have to try, right? You can't just not surrender the white flag. So can you break down what those commitments actually look like and what kind of an impact they can realistically have on the real estate market?
We've obviously had the election. Housing was front and centre, just with the sheer concern around affordability. Also with the high migration numbers. The Labor government has specifically and got a comprehensive housing package around this with a lot of promises in there. At base, on the demand side, their main game is around the 5% deposit, addressing specifically this issue of affordability and deposits for first home buyers. So a first home buyer now can buy a house with as little as a 5% deposit. So if they previously needed a $200,000 deposit to buy a property, that may now be $50,000, which is a massive difference for a first home buyer. So that scheme has been in place. There's a change in that scheme which will remove any barriers around salaries and stuff like that. It'll probably double the number of people who are applying for that 5% deposit scheme. There's also on the demand side their Help to Buy scheme, where essentially it's an equity share scheme with the government. So those two things specifically are looking at assisting first home buyers into the market. The risk with those policies is it stimulates demand, which drives up house prices. So it becomes a circular problem where we bring more demand in, that drives up house prices, makes things less affordable. And the big challenge this government or any government to a certain extent has is the demand initiatives essentially will kick off as soon as those policies are in place. So this change in the 5% deposit scheme starts in July 2026, whereas the supply initiatives, there's a lag. A big challenge for supply has been the cost of construction's been going up more than the cost of housing, restricting a lot of developments, construction costs, challenges with labour, challenges with red tape and governments working hand in hand around supply means that supply initiatives are often a lag. So I think in the short term, we're going to see a stimulus in demand through enabling affordability for first home buyers. Some of those supply initiatives around the $1.2 million homes over 5 years. They're also looking at building 100,000 homes for social and affordable housing.
All right, it is our Saturday morning. We are talking to Anthony Landau. We'll come back with more after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it is time for another property tip. Yes, we are heading off to Queensland this morning and catching up with Tina up there from Harcourts. And you've got a property tip. What is it for us this morning, Tina?
Yes, thank you, Craig. So obviously when you're looking to sell your home, you might be trying to coordinate multiple trades to get painting, electrical, maintenance, gardening, cleaning done. My tip would be to try and find an agency that has an internal property maintenance division so that when our agents go out and meet with sellers, there's a conversation not just about selling the house, but doing all the trades internally, and it's all managed by one person in our team. So that as a seller, you're not dealing with multiple personalities and multiple trades. You're just talking to one person to ensure that the property is presented absolutely perfect for when you go to market.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
And it's a Saturday morning and we are with Anthony Landau talking about your real estate mortgage information, of course, what the investors are doing. There's also been renewed speculation about possible reforms to property tax. Yes, the constantly talked about favourite of any property owner, I do joke, capital gains tax and negative gearing has been put through the ringer, chewed on, mulled over, spat out the other side. Gosh, we love political cycles, don't we, as much as going to the dentist. What kind of ripple effect, Anthony, could we expect across the investment landscape and also housing affordability, do you think?
Yeah, look, it hasn't been announced as policy, but it's always a bit of a sleeper for the Labor government is potential changes to property tax, specifically CGT and negative gearing. Fundamentally, there's 2.2 million mum and dad investors in Australia that are providing properties for people to live in. Any changes to negative gearing and CGT will ultimately decrease the post-tax income and increase the post-tax expense for an investor, which could decrease supply in the market. There's some research suggesting it could increase rentals by 3 to 5%. So I don't think it'll work. I think it's a bad policy. We need investors in the market. We need mum and dad investors to supply those properties into the market.
Well, it's the 10th of May, so we are just 10 days away from the RBA's announcement. Of course, you'll be joining us on Tuesday afternoon of the 20th. Everybody seems to be talking about either a 50 basis points cut or a 25 basis point cut. I don't hear people say it's going to remain unchanged.
No, look, I think the data's pointing to a rate cut. I'm not personally sure whether it's justified at 50 basis points, but I think the data and the discussion is all pointing towards the rate cut down to 3.85%, which is good for mortgage holders.
All right, so we'll play that out coming up on the 20th. Anthony, enjoy your weekend. Thanks for coming back on to the Real Estate Breakfast this morning.
Not a problem. Great to be here. Enjoy your weekends.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
So the Office of Fair Trading in New South Wales, they would like a high-profile scalp, because once you start coming out and saying, look, these are significant penalties for breaking the law in this way, then they're hoping that there'll be a bit of a trickle-down, I guess, effect with the rest of the market to start taking these laws seriously.
Yeah, because as you say, the underquoting of real estate has been illegal in New South Wales since 2016, and these changes, they were aimed at stopping agents from misleading buyers about property price expectations. It's a bit of a grey area, this one.
It is a complicated issue, though, because the legislation is very clear in its instruction. You've got a conflict here. In some markets, if you don't underquote, you are not actually fulfilling your fiduciary obligation to your vendor to get the best possible price. And that is because other agents are underquoting. So it's a very difficult and sticky position for agents to be in.
We connect you to the best real estate information across Australia. The Real Estate Podcast.